Well, let's move to our next conversation. Amit Gupta, Senior Vice President and Fund Manager at ICICI Securities PMS is with us. Amit, good to have you on. So the much talked about correction is here, and obviously, it's a sense of uncertainty, and we haven't dealt with that in quite some time. We've had very shallow corrections every 2-3%, and the dip gets bought. Is this one a little different, Amit? What's your sense?
See, our sense is this will also be, the same course what we have been seeing so far. The intermediate corrections are coming. The geopolitical scenario is also, going haywire in between 2022 onwards. We are seeing the commodities that time actually started moving up, and then we saw the inflation started moving up, and then interest rates. Now the cycle is reverse. In fact, we have seen that the steel prices, they declined to 52,000 per ton from almost 65,000 per ton if you compare with the last year levels. Except gold, because gold prices are up because of the geopolitical scenario. We feel when the interest rates are getting cut, it happens sometimes that the markets move into some kind of profit booking because they performed before. But then the usual course, the corporate earnings, we feel gets better actually going forward. So that, encompasses the fact that it becomes a range bound market. So we feel that 24,000 to 27,000 possibly within this range, broadly the market can consolidate. The only thing is that the Iran should not attack the Strait of Hormuz, because that is very important, because 50% of crude of India is coming through that route. 80% of natural gas of India is coming through that route. So if that is impacted, then I think this situation can go a little more worse. Otherwise, broadly, it can consolidate. It is more mid-caps which are seeing selling because they have been more overvalued. The large caps still are undervalued or at par actually with the valuations of the last 5 years if you see. And that is where the juice is there. It is not that we are completely out of. There are still sectors in the last 2-3 years which have not performed. For example, consumer, agri-related, textiles, sugar-related sectors, IT as a space. I think there is room where we can move into those sectors also now.
By the way, crude continues to surge. Now it's 79.6 in the morning. Brent crude prices were closer to 77.5, not even $78 per barrel. But now you are seeing that big spike in crude prices, and the street is watching whether the geopolitical tensions in Middle East continue to escalate or there is a little bit of a regional spread to it. Amit, there are so many individual stocks in railways, defense, which have fallen now nearly 30% from peak levels. Are any of them looking attractive to you? Because in your opinion, the Nifty, at the bottom level doesn't go below 24,000, and we're not too far away from that, 2% away at the index level. So which stocks would look attractive to accumulate after this 6-day sell-off?
See, from the PSU space, we have already booked substantial profits actually so far. We are there, certain weight is still there in the PSU space. But broadly, we feel that if you look at the public capex, it is broadly peaking out around 11 lakh crores. And the mantle now is shifted to the private companies to do the capex, because the RBI will start, cutting interest rates after some time, and then it is on the private companies to start doing the capex. So that is where I think some of the PSUs which had run up actually before time and the valuations actually were really high. So we have booked profits in those areas, and we are not looking to buy immediately because I think there may be time correction for some time also in that space. Rather, we need to look at, some of the private players in those areas which are emerging now and which have not participated too much and which has not seen that kind of money flow in the last many months. I think that is where the money will move. Money may still, you will not see that. You will realize after a while that the markets are here only, and then money is not going out completely. It is more sectoral rotation which has happened finally.
Okay, by the way, just wanted to point out, Reema was highlighting crude, and guys, we must remember today is the 7th of October, right? It's the anniversary of the horrendous attacks that started the entire disruption in the Middle East. So I think there's a lot of uncertainty and edginess around what happens. Will Israel choose this to kind of make a statement? Will there be any fresh attacks or not? I mean, whatever is the chatter that's been doing the rounds, that's enough to get the market extremely worried. Look at the move on NYMEX right now. By the way, it's not just this. Look at the US 10-year yield. The yield was anyway soaring after the strong, solid jobs report. But the Friday close, it was around 3.8, 3.9%. Now, the US 10-year has topped 4% as well. And it seems, along with, of course, the jobs report in the US economy, there's a bit of a risk premium putting up. Whenever there's uncertainty, the natural tendency to gravitate to US bonds. And maybe there's a bit of that risk premium the geopolitical risk premium that's getting added up. There you see 4% is back up there on the US 10-year. So enough, moving in global markets. And Nigel, enough moving, because we have Nigel with us in the studios now. But it's turning out a bit tough afternoon, Nigel. I mean, not much has actually changed.
Well, from the time I moved from the newsroom to the studio, the last time I was on air, the Nifty bank was up 50 points. And it recovered 1,000 points from the day's low. In a matter of around 12 to 13 minutes, it's back down another 1,000 points. So that's the kind of volatility that you're seeing in today's trading session. But my gut is on the Nifty, that 24,700 mark at least has been protected for now. And the bulls will feel that they live to fight another day. So you'll want to see that 24,700 mark odd getting protected on a closing basis. But Amit's still with us. Amit, we're looking for some ideas now. I wanted, there's a lot of comments on Hyundai, that the company is already listed in other markets, trading at a PE of around 5 times. They come here, they want 25, 30 times odd. Some on the street are not too happy. But from the auto pack, you like Maruti, I believe. Tell us more about that.
See, we like those ideas, where some negativity has been there for some time, right? And then the negativity is nearing the bottom. Because generally you see the stocks participating afterwards. For example, you look at Colgate Palmolive, what happened? When Colgate was around 1800, 1850, the market share stopped actually falling further and the stock got double. Even in an FMCG space, it got doubled. Same, I think Maruti has underperformed. If you look at the auto index in the last 1 year, it has moved up by close to 55%, but Maruti has hardly moved up by 10-15%. And why it was not happening? Because the small cars, last 2 years we were talking about this, that small cars are not being sold. It is more the SUVs. So I understand the trend. SUVs have gained, it has reached to 60% of the total passenger vehicles. But still, when the money now, after the state elections, we are seeing that there is some consumer oriented schemes which can start. And that is where the rural related area, the mass consumption area, it can start participating actually, which was not happening before. So our sense is the small cars also can start picking up, right? That can create the bottom for the stock. If you look at the hybrid cars, which Maruti has, so there we saw that the taxes are very high in terms, if you compare with the sole EV vehicle. And we have seen after Uttar Pradesh, Karnataka is another state which is coming out to cut the hybrid taxes actually now, the taxes on the hybrid cars. Now, along with this, if you see now the EVs, they were not coming out with before because they had a view that they will come out with a more holistic approach because they want to give service even in remote areas. And now in the coming 6 years, they are going to come out with 6 EVs also. In CNG, every year they are gaining the market share by almost 1%. So that is where we feel somewhere in such kind of volatile markets only it happens that the negativity in a particular sector or a particular stock, it gets bottomed out. We don't realize the smart money goes in and the stock starts participating, and then we start talking about this storyline. I think we need to look at this stock now, and that is where we have taken it in our ACE equity portfolio.
Got it. What about Hyundai? In the next 2 days, we're going to hear the pricing. How interested would you be? Maruti over Hyundai?
So I will prefer Maruti. It's in the listed space, known actually. So our sense is it is getting little bit more aggressive in terms of EV. Then why not to look at Maruti only when it is available actually at a better valuation now?
Okay. Fair enough. That's autos. By the way, let's just pull up that Bank Nifty chart again, because it's dramatic, the moves that have taken place. Like Nigel was pointing out, this drop it's happened in all of 10 to 15 minutes. Yes. Look at that upside down V. And it's a very, very steep one at that. So 1,000 points gone just like that in a blink. And that kind of tells us about the nature of volatility in the market today.
So watch for a big FI net sell number again today. That's where they have the highest exposure, and that one is seeing a fair bit of selling as well. And today, in any kind of bounce, it's got sold into.
Absolutely.
So, I think we'll brace for another large one today. Nimesh will get us further details, but I think the indications are there.
Absolutely. I mean, there's been absolutely no let up from the kind of heavy blows that we've had from the FII selling that's come through. Come in on this, Amit, because, we've also seen the updates. Let's leave the FII selling aside. Not much that can be done about that. But what sense do you get? There's a lot of nervousness as we gear up for Q2. A lot of updates are coming in. I mean, there's a big fight to raise deposits. But in that fight, some banks are sort of losing out on growth. How are you reading the updates, and what's your advice at this point on financials?
So financial also is interesting story, because we have been saying that the valuations of the banks, are fair because we look at the banking index. But in the banking index itself, if you see the HDFC Bank and Kotak, they have remained flat, which comprises 40% of the bank Nifty Bank actually. So that this is where the other side of the picture has performed, and this side of the picture has not performed. There has been pressure because of LDR. HDFC Bank still holds around 103% of LDR, which can come down there. That's why in the last 1 or 2 quarters, we saw the loan book also was getting sold. Now, yes, I understand the fact that deposit has been a problem, which this bank has been able to garner recently. NIMs were under compression because there was an expectation going forward there will be interest rate cut. So banking has taken in its stride now that interest rate cuts. They have not been performing these banks for the last 1 year. So they have taken in the stride. So value is there for sure. Value is there for sure. And I think we have to see now going forward. I know how it starts performing. Money flow is still absent. And that's why I think if we have to look from the index perspective, then the money flow can move into technology space. I think IT can be something which can surprise the market going forward because it was not performing before. And what we like, if you see from the global perspective, US perspective, we were talking about recession, which was getting heavy on the technology space. But our sense is the yield spread, the 10-year bond yield in US and 2-year bond yield in US. If you see the spread, which became negative in the month of June 2022, it became positive in the month of June 2024 now. That means the scenario of recession may not be there, and you are cutting interest rates, which is good eventually for the IT companies which are catering to mortgage, banks, or the BFSI space. So I think that's where the IT can be looked at. And these companies over the period have moved into ER&D space also, along with the products and services. And we have seen that the cars that we are using, the AI that we are using, the softwares were hardly 7-8%. Now it is 26%, and it can be 58-59% also. So these companies' demand is likely to remain. And I think that is what we can see going forward as one of the alternative where money can be moved.
So IT could emerge as a bit of a dark horse going into earnings season next week. TCS and Tata Elxsi both report their numbers on Thursday. So